What's up guys, this is Gerard, back to you with another tutorial video on taxation. On this video, I'm going to be teaching you how to claim interest expense as tax deduction. So I'm currently making videos for deductible expense for tax purposes. So if you're interested, you can check out the list in the description below. So interest expense is generally a cost in relation to borrowing of funds. It is reported in the income statement and is derived from lending arrangements such as line of credit, loans, and bonds. For tax purposes, the requisites for deductibility of interest expense is mentioned in Revenue Regulation 13-2000. Issued on December 29, 2000, it implements Section 34B of the Tax Code as amended. So the requisites are as follows. First, there should be a valid indebtedness wherein interest payment is paid or incurred in relation to such indebtedness. And of course, the debt should be the taxpayers. The debt should strictly be connected to the taxpayer's trade, business, or exercise of profession, and such interest must be paid or incurred during the taxable year. It is also important that interest payments should be in writing and must be legally due. Take note that interest payment to related parties are not allowed. Some examples of related parties could be a close member of the taxpayer's family or a taxpayer that is related to a reporting entity. In a more technical aspect, the interest should not be incurred to finance petroleum operations, and lastly, interest incurred to acquire property used in trade, business, or exercise of profession, the same was not treated as capital expenditure. Now, with regards to the limit of interest expense to be claimed as tax deduction, we have what we call tax arbitrage, wherein this is to recover the tax savings from the relatively lower 20% final tax on interest income. Currently, the arbitrage limit is at 33%. But we may expect that this could be updated as the CREATE law changes the applicable corporate income tax. Now to demonstrate, let's have an illustrative problem. A taxpayer had an interest expense of 50,000 and earned interest income net of final taxes of 8,000. How much should be the deductible interest expense? To compute, the interest expense is 50,000. This shall be lowered by the arbitrage limit. It is computed by dividing the 8,000 net of final tax to 80%. Now, if there was no arbitrage limit, the 50,000 would be the deductible expense. So the idea, in the absence of arbitrage limit, was to borrow funds and deposit the proceeds to earn interest income, creating tax savings. So the government recognized this, so they created this arbitrage limit. To continue our computation, the interest expense of 50,000 minus 3,300 arbitrage, the deductible expense shall be 46,700. As a tip, you can request your bank to provide you a certification with regards to substantiation of such interest expense. Included in the certification could also be documentary stamp taxes paid, which can also be claimed as tax deduction. Now to conclude, take note of other rules in connection to interest expense, such as purchase of long-term assets, where instead of using interest expense, we make use of depreciation expense. We have also Oil and Exploration Development Act of 1972 and the effects of Bayanihan recover as one in relation to BSP memorandums. And that's it. So as always, a huge thanks for watching. If you found this video very helpful, please give it a thumbs up and subscribe if you haven't yet already. So this is Gerard. I'll talk to you in the next one.